Hello, ladies and gentlemen. Greg McCloskey from ForexLive.com. I'm going to take a look at the 10-year yield in this short video and explain a little bit why the yield's going up, but the dollar's going lower. Is it technicals in play? Let's take a look. I've got the daily chart here of the 10-year yield, the U.S. government 10-year yield, and as mentioned, the yield is to the upside. You can see it here in the last bar with the move to the upside here. And if we go back in time and take a look at this high right here, the market came up to a peak and then rotated to the downside. It wasn't until the market moved back up to that old high right through here, back in the month of August, I guess, August, early September, where the price moved up to that level and once again found sellers. Now, the low price did not go very far after finding that peak. We moved back up to that level, found resistance sellers once again right through here. Again, we're talking about yields here, but the decline was even more minimal before the price eventually broke to the upside here in the month of September and moved up to our high price, high yield, I should say, at 5.021% toward the end of October. And since then, we've seen a rotation to the downside, around 50 or so basis points to the downside. And where did the market low come in? And we came back to this swing area right through here near the 4.33 to 4.36 area. Also near that level is the 38.2% retracement of the move up from our 2023 low yield to the high yield that we saw in 2023 as well. So not only do we have this old ceiling right through here that became a floor, we now increase the floor's presence right here with a bounce off of that level. So the movement to the upside in trading here today in yields may be a direct result of the technicals that are in play, forcing the price away from that swing area, 38.2% retracement. And finally, also near that area is the blue line. This blue line represents the 100-day moving average, and so you can add that to the mix of the cluster of support in yields down near the 4.34-ish type area. As long as the price remains above that level, then the bias remains more to the upside from a technical perspective. If we do move below that level, however, we could see further momentum to the downside in yields. Speaking of the currency markets, let's take a look at some of them right now, and we can see, like in the pound versus US dollar, we are breaking above the 50% midpoint. That 50% midpoint is of the move down from the July high, this is high right here, to the low right here that we saw in the month of October. And so breaking above 1.25886, it would take a move back below that level to increase the bearish bias for that currency pair. The dollar versus Canada is also taking a sharp move to the downside here. It is currently testing its 38.2% retracement of the move up from our low price that we saw in July to the high price that we saw in the month of October, early November. That level 38.2 comes in at 1.35908, and you can see that the price came right down to that 38.2% retracement and found support buyers against that level. Finally, let's take a look at the euro versus US dollar, and if I take a look at this on the hourly chart, you can see that the price is extending to the upside. We did get above the high price, or the high price, yes, from yesterday's trade at 1.09299. That was our next target as we came into today's trading day. We also are moving away from the 100-hour moving average of 1.09159, and it will take a move back below that 100-hour moving average to increase the bearish bias. Closer support comes in at the 1.09299 level. Currently trading 1.0938. Our next target comes against the highs for the week that came in at 1.0964. So the dollar is going to the downside, while yields are going to the upside, but technically speaking, we are breaking to the downside from a technical perspective in the US dollar, and to the upside from a technical perspective in the US interest rates, specifically the 10-year yield. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.